Hi everybody, this is Ludovic at FFR Trading. Welcome to our monthly update. I wanted to go over some of the economic data that we just finished with the end of the month and how that affected some of our trading systems. And we had an incredible week. I'll go over the last month's week. I hope that we continue with this type of trades. I mean, it was just truly incredible. I want to go over a few economic data that was released. I did a report, I compiled it. It's in a PDF format that you'll all get a link that you can click on and you can do a review or if you want to do an in-depth analysis of the economic data that I put together and how it's affecting our trading systems. First of all, there's been a number of questions or emails that were sent via questions or calls even regarding some of the information that was given on the previous month's economic update. So I want to address those. One of the questions was, can you explain what it means to actively manage your accounts? So that's a very good question. I'll go into that. And also, I had a number of questions here. Let me just see. Yes, a lot of subscribers asked, how do I know which strategies and methodologies are reflective of the current market conditions? So again, an excellent question. I think I'll answer the first question. First of all, active management just simply means that we're going to be more involved in managing the account. And it means a little bit, not a lot, but a little bit of participation on your end. So for example, a lot of our clients and some of you out there are using the auto trade feature, which is an excellent way to duplicate the same success that the developer of the trading system is utilizing. Occasionally though, we have market conditions that shift. And so sometimes with, for example, the turtles, we'll have what we call a false breakout. So in other words, the indication is that we should enter the trade. And many times you may have seen in your accounts where, pretty substantial profit. And we ultimately get disappointed because that profit dissipates. And then sometimes we get out that break-in or even a loss. So occasionally we'll intervene. So I'm going to give you an example. Last week, because of the U.S.-China trade talks that we had, the indexes shot up to the roof. So we were able to take a Dow Jones trade. In fact, we were able to take the YM at 3,500. We were also able to get the NASDAQ trade at about 1,250, actually 1,400. And if you look now, those trades are still open, but we're in maybe $1,000 trade when last time I looked. So that's what active management means. It means that you call in, you speak to your representative or your project manager and just ask them, hey, what do you think I should do? So anytime you see yourself in a profit of approximately 30% or more, you should probably call in to see if we're moving stops up and what we're doing. So that's the answer to that question. First of all, I wanted to just go over the market conditions of what the Federal Reserve's done. It looks like they're shifting towards a more dovish stance. They were expecting 2.9% growth, came in at 2.2, so a little bit lower. If you remember, there was all this hoopla and noise about the inverted bond yield, and it was a shock. Oh my God, we're going to go into a recession. How quickly that dissipated, right? That's not a story anymore. So a key Fed indicator whose inversion has historically signaled a potential recession on the horizon, well, no more, right? Not anymore. The other thing too is that there's been a lot of advances on the indexes and a lot of up and down movement because of this China-U.S. trade deal. Hopefully there'll be an agreement sometime at the end of April. We don't know, but hopefully it'll have some kind of an impact. Stock indexes literally across the globe rebounded because of this China stimulus that they announced. The central bank pledged to support the slowing economic conditions that are going there. So they're going to increase lending and loans and reduce the borrowing costs. Another key economic indicator that took place literally on the 26th, and some of you experienced that in your own accounts, but indices surged, literally surged on the 26th. Even though we had weak housing market reports here in the U.S., the indices seem to be holding up quite dramatically. So we were able to take the YM, which was the Dow Jones. A lot of you reported that you were able to pull out 5,500, 5,600 that day. Also on the ES, which is the S&P 500, we were able to pull out about 1,400. So all in all, the last week was just phenomenal. In fact, Last week was 5,500 on the lean hogs, 1,250 on the 5-year notes, and about 3,500 on the Dow Jones. So that's almost $11,000 for the week. So obviously we're real happy with that. Anyway, despite the fears of the global economy slowed down, the S&P, guess what, gained 12.3% this first quarter. That's the best performance since September 2009, so nearly a decade. So despite all the uncertainty and the up and down, we've had a 12.3% gain. So with that in mind, let's look forward to the future. Let's hope we continue with the success that we had last week. Bye for now. Thank you.